It's time for us to move on to our hold or sell segment. And this week, Abhinav has written in. He's 28 years old. He tells us he has invested in a few funds. He has a long-term horizon and a high-risk appetite. He wants to know if he should be tweaking in anything in his portfolio. His mutual fund investments start with HDFC Prudence and HDFC Balance. Now, two balanced funds, impressive, but balanced nevertheless. Do they fit in with his risk appetite?
No, for a 28-year-old with this kind of risk tolerance and all the time on his side, he can do without this.
The next on his list is the HDFC Growth Fund, Dhirendra, investing 5,000 rupees every month. Would you recommend he continue investing in this one?
I think so. HDFC Growth is a fairly generic fund. It can move across the market, and I would say that it is, one can call it an aggressive, diversified portfolio. Yes, worth continuing.
UTI Opportunities is the next on his list, also 5,000 rupees a month. This is an impressive fund. Would you recommend you continue investing in it?
Yes, this as well, because this fund is also a top rated in its category, a fairly aggressive fund, has done very well over the past 4 years.
The Birla Sun Life MNC is the next on his list. Doesn't make the top list of your equity diversified funds, but should he continue investing?
It is little less diversified given the ownership pattern of many of the companies here. And we find that a certain kind of companies don't find a place here. So in that sense, it is a little less diversified fund, but it's a good fund.
IDFC Premier Equity is the next on his list. Continue investing in this one. This is a strong performer.
Yes, it's a strong performer, and it can well complement the other two fund he has, which is HDFC Equity and UTI Opportunity. Besides that, the Birla MNC is a fairly conservative fund. As an equity fund, I think it's a very high quality conservative fund. And this can well complement that as an aggressive play. So these four funds can, they together make up a very nice portfolio for his time frame.
It's a slightly worrying allocation, which is higher than everything else, 8,000 rupees a month going into the Reliance Gold ETF. Would you say he needs to be putting such a lot of money into gold?
I would strongly urge him to stop this. He should look at gold only if he has a daughter and he's accumulating small sums to be exchanged with gold at a future date. He should be able to write the gold prices. Not beyond that. He should not think in terms of diversifying his money across gold through gold. So he should reduce his position or his SIP amount in the gold fund accordingly.
Okay, so reduce your allocation to gold accordingly. Dhirendra, if he takes off the gold ETF, Prudence and Balanced, he has 15,000 rupees a month right now that needs to be allocated. Where would you recommend he put that money?
Our aggressive portfolio could be a decent benchmark. And there we have 10% allocation to fixed income. The other four funds which he has, I don't think there is a need to spread across any more investment. He should spread the remaining money in the other four funds which he is investing anyway.
So spread that money over the four funds that you're investing in right now. If you don't have an emergency fund, make sure you put one emergency fund aside so that 15,000 rupees every month that you're saving should be going into your emergency fund. We have a quick question from Devashish Datta. He has 1 lakh rupees that he wants to invest right now with the objective of saving tax and getting good returns in the long term. He wants to know where he can invest. And this is an important question, Dhirendra. For the next 1 year, we still have ELSS, which means we can still invest in tax-saving mutual funds. Could you recommend 2 or 3 tax-saving mutual funds our viewers can use right now?
If I have to choose two relatively proven ones, I would say, ICICI Prudential Tax Plan or HDFC Tax Saver. If I have to choose two aggressive ones, I would say, the Taurus Tax Shield and the Religare Tax Plan. These are, not as long a history, but doing exceedingly well in recent times.
Tax saver funds, they're recommended by Dhirendra Kumar for you. You can use them this year and next year for tax saving.